And let's get up to speed with European futures on the back of a very strong day yesterday. Markets trying to recapture some of that territory where they were left behind over the course of the trading week in the context of US markets escalating very steeply. We had a negative trade last week. So yesterday we piled on more than 2% on some of these boards, the Stoxx Europe 600 to the DAX. But you can see this morning, while some of these markets again poised to further stretch out that green territory, the French market is looking a little bit soggy, and we had very big bellwether numbers to digest from LVMH and after hours trade, suggesting that a lot of the tariff concerns are catching up with that area of the market. Now, to the Asian boards, what we're seeing over there today, we have got Japanese and South Korean stocks trading much firmer, but Hong Kong and China stocks just settling a little bit lower in the trading session, Steve.
Right, very interesting. OPEC, of course, which recently raised production, has now cut its global oil demand growth outlook for 2025 and 2026, pointing to the expected impact of US tariffs. Alongside data received in the first quarter, the group now expects demand to increase by around 1.3 million barrels per day this year, which, despite the cut, is still higher than other industry estimates. Yes, the suppliers think it's going to be more demand, the consumers think less. The IEA, representing the consumers, will become the latest to issue its monthly forecasts later this morning. UBS has cut its China growth forecast by 60 basis points for this year, down to 3.4%, and kept its 2026 outlook at 3%. That makes it the most bearish on China amongst the big Wall Street lenders, according to Bloomberg. In the note, the Swiss lenders said tariffs posed unprecedented challenges to China's exports and will set forth a major adjustment in the domestic economy. Meanwhile, the Chinese President Xi Jinping vied for stronger ties with Vietnam, calling on the country to jointly oppose, quote, unilateral bullying on the first day of his Southeast Asia tour Monday, signing 45 agreements with the country in the capital city, Hanoi. JP is leading our coverage on this. He's now joining us from Kuala Lumpur in Malaysia, where the Chinese president is expected to visit today for the first time in almost a decade. So, JP, fascinating the timing, fascinating the dialogue, as well as countries around the world reel from the tariff threat, real or potentially to be negotiated from the US president.
Absolutely, Steve. It's a fascinating time, but also a necessary time, because I think what the world is coming to grips with right now is the fact that these tariffs could have a punishing effect on economic outlooks at the moment, and thus the need to try and pivot and try to galvanize and try to fortify your existing trade relationships and economic relationships to try and offset any headwinds from the tariff policies of the Trump administration. You talked about him coming actually from Vietnam, where they signed about 45 deals. In a recent article, President Xi Jinping also mentioned the long history that China has with Malaysia, saying this can go back to as far as 1,300 years during the Tang Dynasty, just to cement and to reiterate again just how long and how strong some of these ties are with Malaysia. Now, on the table today might be deals that China will propose to Malaysia to fortify and strengthen that economic relationship, which is something Malaysia also wants. But this also comes under the shadow of a Trump administration that's looking more and more disfavorably on China, trying to court some of the support. We did hear from President Donald Trump, who said that China's recent talks with Vietnam might be what he said, a form or an attempt by China and Vietnam to quote unquote screw the United States of America. Again, the American president's words, not his. But again, also shows that it's going to be very delicate to actually pivot away from this. It's also causing a lot of uncertainty with regards to how you're going to conduct your economic policies, not just for governments, not just for economic ministers and officials, but also for many businesses here in Southeast Asia. We did speak to Kevin Lam, who's the CEO for Hong Leong Bank, one of Malaysia's largest banks, and he did note that during the last 2 weeks, there's been a lot of uncertainty and a lot of panic, for lack of a better term, really gripping a lot of business leaders. But as the smoke settles, he says, they're starting to notice there's a lot of opportunities, and the opportunities are found in pivoting towards each other. Here's what he meant.
First, the dialing back down of the tariffs from, like you mentioned, Hong Leong Bank were in Malaysia, Vietnam, and Cambodia. Malaysia was initially slapped with 24%, and then Vietnam with 46%, and Cambodia had 49%. So initially that was a very, very high number, and if it were to be seen through, I think there would be a lot of impact. But, you know, we all heard about the 90-day pause and the recession, or rather the receding back to the 10% level. Now there's given a bit more calm to the market at this point in time. And the visit of President Xi, right, which is what you guys are doing this program for essentially, is actually bringing some optimism. I think we were talking about Malaysia actually celebrated 50 years of state relations with China. So we think that there will be opportunities, right? We're looking forward to President Xi's visit and see what, packages, what deals could be unfolded.
And that's what we also have to remember, that it's been about 10 days actually since Liberation Day, when markets were roiled. We saw those huge spikes and a lot of questions, uncertainty and fear really gripping the markets. But as we get farther and farther away from that, you're starting to see business leaders here voicing out that, hey, there might be opportunities by pivoting to other economic trading partners and perhaps ways to try and offset and mitigate some of the negative impacts of this tariff policy. But you'll have to contend also with the uncertainty, because every week it seems that the tariff policy of the United States continues to evolve and change, whether it be deliberate or not, and that's something that a lot of folks on this side of the world, and maybe even Europe, will have to contend with as well.
JP, while you're there in Malaysia, I wanted to ask you a little bit more around its own personal journey, because we know it's been a significant player in semiconductors, about 13% of the market, and there's a ton of semiconductor news coming, according to the Trump administration. I wonder how Malaysia is feeling, because it's had very big investments from the likes of Intel in recent years, trying to build out its largest 3D chip plant there. Does Malaysia feel like it's got a target on its back?
That's a great question, actually, Karen. And just to mention, it's not just Intel that's here. We have the likes of NVIDIA trying to build out a data center here. Infineon's been in Malaysia almost as long as Intel has as well. The one thing that one official that we spoke to actually off the record mentioned was they are expecting that the semiconductor industry will actually take a bit of a hit because of the uncertainty, despite the fact that they've been actually granted a stay of execution or reprieve from some of the tariff actions. Now, we have to remember, as you highlighted, many believe that in Southeast Asia, the country with the best chance of moving up the semiconductor value chain is Malaysia, because of their deep experience in packaging and how important packaging has become towards constructing and building these advanced AI chips at the moment. But again, a lot of things will be called into question, and they do say that while it's still too soon to tell, they are saying that it won't be a smooth ride as well at all moving forward, and thus also could lead to some blowback and just a little bit of pain for them, whether or not it's short term or perhaps medium term.
All right, brilliant. Thank you very much indeed for the great coverage. I think we'll see you again tomorrow. Superb.